Hi, it's Marissa here from Rise High, and today I am joined by Chris Carter from Carter Property. Thanks for tuning in today. Today we are going to be talking about valuations. Specifically, we're going to drill down into what you can do if you think you're paying too much in your council rates, too much in your SA water rates, too much in your emergency service levies. Chris is the man to talk to us about what we can do to challenge the Valuer General's valuation process. Before we get into that detail, we're going to find out a little bit more about Chris, and we're going to go through a few questions that have been sent through to me through the week. So welcome, Chris. Thanks for joining us.
Thanks very much, Marissa. Appreciate being here.
So perhaps before we get started into the juicy stuff, can we find out a little bit about your background and what your specialisation is with valuations?
Sure. So I'm a qualified valuer, have been a valuer for over 30 years, 35 plus I think now, even though I don't look it. I did a degree course at the university to qualify as a valuer, and then I've worked in all facets of real estate. So I've worked in sales, commercial sales, leasing, agency, property management, development, and really sort of did about a sort of 20-year apprenticeship. And then I've been in my own business, Carter Property, for 20 odd years.
Excellent. So I think in your own business you do sales, leasing and valuation. So, is that helpful to do those other aspects when you're actually doing valuations as well?
Absolutely.
Yeah.
Most valuers are just doing straight out valuation work. Where we're doing agencies, I might be standing at an open inspection for a house, I might be marketing a commercial property, and we're at the coalface, and so we're getting direct feedback from the market at any given point in time. So that that definitely assists us.
Yep, excellent. So let's just go to the basics and just explain to the audience how does the government derive how much you have to pay on council rates, how much you have to pay on emergency service levies, how much you have to pay for water rates, etc. Like, how do they come up with the figures that appear on our bills when we receive the bills?
Sure. So the Valuer General is the government entity, if you like, that's tasked with doing the valuations, and they provide a site value and a capital value on every property within the state. They do that. They're legislated that they should do that every 5 years, and then in the interim years they either annex or just provide an update. Ultimately, there are a couple of exceptions in that Port Adelaide Enfield Council, they have their own valuers for commercial properties, and the Adelaide City Council have some of their own valuers as well, and they use annual values rather than site and capital values. But on the whole, the Valuer General does site values and capital values. Now, they are provided dated as at the 1st of January, and the Valuer General gets all those together. They provide those figures to the councils in about March, and then the council can work out their budget. So if a council's got a particular budget, might be 40 million or something like that, they then say, well, we've got 400 million or 4,000 million worth of property, and we need to apply a percentage for houses, for commercial, for whatever, to equal their budget.
So just explain the terms site value and capital value. What do they actually mean?
Okay. So capital value is for everything you see on the property.
So that includes the building and the land?
Correct. So building and land, and we'll also look at the highest and best use of the property. So you may well have an old house and some glass houses on a property, but it may be worth more as a residential subdivision. So we'll take into account those factors.
Okay, so the capital value is not actually just based on the value of what is actually on the property, but it could be actually based on a better use of the property.
Correct.
So let's say, for example, you were in an area on a street that had the ability to develop up to 4 stories, and you just had an old cottage on the house. Would that mean that you would expect your capital value to potentially be worth more than what a bank says it's worth, for example?
Could well be, yep. Yeah. So the capital value is effectively the value that you should get for the property if you put it up for auction and sold it.
Right.
That's what someone in the marketplace is prepared to pay for the property.
So would that mean that capital value should equate to market value potentially?
Yes, it should.
And site value is then the value for the land?
Site value is the value for the land. Yeah. It does include such things as retaining walls and levelling and those sorts of things, but excludes any other improvements such as buildings and so on.
Yep. So, why is it relevant, or why is it relevant to understand the difference between site value and capital value? Which taxes and expenses are based on which value?
So your land tax is based on the land value, on the site value, I should say.
Yeah.
So based on site value. The majority of other fees are based on your capital value.
Yep.
So your council rates, your emergency services levy, your SA water fees and so on, they are all based on capital value.
So clearly, if the capital value is higher, you would expect to pay higher council rates, higher emergency service levies, higher water rates. Are there any that I've missed?
No, if the Valuer General has assessed the figures at higher prices, you will be paying larger rates.
Yeah. So clearly, one of the things that people should do is really understand what their capital value is that the Valuer General's assigned, I would say, because that's the starting point for determining whether you could save money on those expenses. How can people find out what the current capital and site values are that the Valuer General has already assigned to their properties? Where can they get this information?
Okay. When you get your council rates or your SA water rate notice, it will have the capital value on there.
Yeah.
And likewise, if you get a land tax notice, that'll have the site value on there. It is also possible to research that because it's on the government website, sa.gov.au, and the SAILIS, which is SAIL SAILIS, is the government website which lists all of the capital values and so on. And the site values are available on there. For a residential, I think it's about $6.60 to do a search as a private person, and as a commercial it's $24.20. There's a whole range of reports you can get. Some will give you sales. $15.50 will just give title details and the values. So it's pretty much the methodology there.
But of course, if you can dig up a water rates bill or a council rates bill, the valuation will be on there.
Correct, you'll get it for free.
Yeah, that's awesome. Just before we continue, shout out to James, Twee, Rue, Amy, Sarah, Richard. Thank you so much for tuning in. If you've got any comments or questions, please feel free to add them below. We'll be chatting with Chris for the next 20 minutes or so we'd love to hear your input or get your questions, and we'd love to answer them. So moving back to the revaluation back to the process of the valuation. So basically we've established that all of our government-related expenses are linked to the Valuer General's valuation of our properties.
Yep.
And the higher the valuations are, the more you're going to pay.
Correct.
So then it goes without saying that if you want to reduce the amount you're paying, you need to argue potentially that your valuations are too high.
If they're too high.
If
sure.
they're too high. So can we talk about that process, and firstly maybe how to identify maybe if they are too high, and if you do establish that they are too high, which I think in some cases there have been legitimate cases where that is the case, how can people go about getting these reviewed or reduced potentially, which will then flow on to reducing their expenses down the line?
Okay, so look, the process, there's a couple of important time factors that we have to abide by. So the first thing is that the Valuer General issues those figures to the councils in about March. Council then set their rates and issue the council rate notices, which come out generally in July, thereabouts. You have 60 days from receipt of your first rate notice to object. So if you're outside that time, the Valuer General can ignore your request.
So is that just with your council rates notice, your first council rates notice?
So when you first become aware in a rate notice. So
it could be water rates or council rates or ESL.
Correct.
So if people haven't really taken notice of this previously, and they now go, after watching this video, they go and look at their rates notice and they look at the value and they think, oh wow, that's way too high.
Yep.
But they realise that they've actually been paying those rates on that value for some time now. Does that mean that they can't do anything?
No. So if they've just become aware and they're within 60 days, they can then object.
So 60 days of receiving any notice?
Any of those notices,
right.
Correct.
Even if they've paid previous notices or previous rates based on that figure, they can still object when they get their next notice?
You most likely won't be able to object to previous years, but,
but moving
you
forward,
can object to the current values, correct.
Okay.
So moving forward, you've got 60 days in which to object. It's a free, it doesn't cost you to object to the Valuer General, and there are forms and they're available also on the SA Government site. There is also some frequently asked questions and fact sheets on there as well. But the process is that the more information you can provide and as to why you think the figure is incorrect, the better it is. So you fill out the form, which is online, and if you can provide information that that's useful to a valuer, you might say that my house is worth $450,000 because the one down the street sold for $460 and it was much better, and the other one at $430 was better. There was one that was not quite so good, etc., etc., and therefore my value should be.
Yep.
Or you can go and engage the services of a certified practicing valuer.
Yep.
And
someone like yourself.
Someone like myself, or
yep.
there's, our organisation is the Australian Property Institute, API. Yep. You can contact them and they will give you a list of valuers with expertise in your particular field, and they can tell you pretty quickly what your value should be, or if it's close or far away from the Valuer General's figures.
So can they also then, if you do engage a valuer to give you that advice, can the valuer then go that step further and facilitate the lodgement for you?
You have to lodge personally, but you can authorise a valuer to lodge on your behalf. So you just simply write a letter to say, we appoint Chris Carter of Carter Property to negotiate on our behalf.
Yep.
So then that valuer can lodge the objection. That gets lodged with the Valuer General's office, and they then deal with that in their fashion. The process can take about sort of 12 weeks. Mm-hmm. It's going to depend though on how many objections they get, and I'm suspecting they're going to get a whole lot of objections coming up.
Yes,
but the process they then go through is to assess whether their valuation is right or wrong.
So if you are going to go through the process of disputing a valuation, obviously, like you said, it's a 12-week process. So your rates notice would have fallen due before that process is complete.
Pay the rate notice.
So people should pay their rate notice still. So even if you are going through a dispute, make sure you pay your notice. That's also good for your credit rating. So make sure you keep on top of your bills and your notices. But you can still be going through the process. If they have paid their notice and they are successful at the other end to get their valuation disputed, would that money be refunded to them or be shown as the extra that they've paid, would it be shown as a credit for future payments? How does it work? They'll get a refund?
They'll get a refund, yep.
So that's good news. So you can go through the process, And what about, one of the services that we can offer our clients at Rise High is free upfront valuations of their property that are conducted by a bank valuer. Mm-hmm. So would a bank valuation actually assist someone with a revaluation dispute?
Absolutely.
Is that something that would assist?
Yep.
What are the main differences between a bank valuation versus, how the Valuer General would assess the valuation of a property?
So the Valuer General is assessing as a mass rating basis. So it's very hard, and they've got limited staff numbers, but they are intending to value every single property, which clearly time-wise is hard to do. So they'll do it on a mass rating. They'll look for trends in the industry, they'll look for the pertinent features, and ultimately, if there's been a growth in high-rise markets on Anzac Highway, that'll change the Anzac Highway values quite substantially. Yep. So they look for those things, but ultimately they used to value far more regularly, and they've fallen behind in that. And so that is the revaluation that everyone's hearing about now, the double whammy that people are hearing about in the paper, because there's now been an undertaking that they intend to revalue sometime over the next 2 to 3 years, do a revaluation of all of the properties.
Yeah, so that's big. I mean, the revaluation is a really big issue, and I'm not really sure that many people are aware of what it means or what it is or how it's going to impact them. You know, we've been talking to the Rise High audience a lot about the proposed land tax changes, but one of the things that we haven't mentioned a lot about is the revaluations. And if people have heard about revaluations, they have thought that it's just linked to land tax and it's only going to impact land tax. But that's not the reality, is it? The reality is revaluations will impact people's council rates, people's emergency service levies, people's water rates on their own homes.
Correct.
As well as investment properties. So let's talk about that in more detail. You said it earlier in the video that the government has to revalue every 5 years.
Correct.
So has the government been keeping up with that? Have they been valuing every 5 years? Is that sort of the gap between the last revaluation and today's revaluation?
My belief is it's substantial time since it's been revalued.
So probably more than 5 years.
Yes.
But that's scary in itself, because that means the gap is bigger, which means that, you know, we might see more of a jump from what properties are valued currently to what they will be valued following the revaluation process.
Correct.
Yeah. Is that your fear?
On certain properties.
Yeah.
You know, the philosophy used to be that the Valuer General valued conservatively. They would simply value conservatively, and everyone used to think that if you look at the council values that they were 10-20% conservative, and if you were going to sell a property you would sell them, that would be a guide, but the actual value would be above it.
I certainly remember a time in mortgage broking where we would look at the council rates notice and we would know that the bank valuation would come in at least 10 to 20% more than the council rates as a rough guide, but that's no longer the case.
No, that system works fine. If everyone knows that, but it's about the relativity. If the properties are all valued on the same basis, then that works and everyone pays their fair share. But if they all are at market value and very accurate, that system works well as well. So ultimately, the councils shouldn't be gouging on their council rates, because they know what their budget should be, and I won't say that they're not. That's maybe a story for another day. But the Valuer General in doing their assessments has been indexing, so they may say that things have gone up a few percent here and whatever else, and they have lifted values. So some may be around the mark. Obviously, if a property sells, they've got that information. They can bring in actual sales.
Yeah.
But the question is that if a property sells and it's an arm's length transaction and it sells for $500,000, and traditionally the Valuer General has been somewhat below that. Now it should be $500,000. So
it should be market value.
It should be a market value as a capital value.
I mean, my understanding is that the revaluation process, so far they've only done a couple of council areas in SA, is that right?
Yep, they've done the Walkerville and the Adelaide Plains Council and Unley Council.
Yeah, and my understanding, speaking to some property owners in Unley, my understanding is that some properties have gone up by as much as 30%, even some 100% have increased in value. Now that's a massive increase.
It is.
In ongoing costs in all of those expense categories that we've mentioned. So, that's a big jump in those expenses. What would you say in relation to that?
Well, the first thing is to ensure that your council rates are based on the right figure. So is checking on your site value and capital value. And if we can just jump back a little bit there to the objection process. So if you think the rates are too high that have been put on by the Valuer General or the council in Port Adelaide Enfield case, you can object. So you download the form, you lodge the objection, either with a valuer support or your own advice. You think it's too high for this reason.
Yeah.
That then gets assessed by the Valuer General, and they'll come back and they'll either leave the rate the same, drop it, and possibly in some instances they can increase it, but that would be quite rare.
Okay.
But on that basis, you get your response. You then have 21 days from that advice to take it a step further. Now you have two choices. One is you can take it to SACAT, the government court process, or you can take it to an independent valuer for review. Now, the SACAT fees are $210 for an individual, $263 for a company, and the independent valuer is $112 for the principal place of residence and $279 for other property.
Yeah.
So you pay your $279, and you then they will provide a list of valuers that are in the nominated category, and you can select one of those valuers. I am one of those valuers, for example. So
you can select Chris if you're going through that process.
You could do that, exactly. And so what happens is that I then, it's a semi-judiciary role, so I as the independent valuer, I then receive a submission, your submission from the objection and or your valuer. You can provide further advice at that time. I then receive the Valuer General's valuation, and they actually provide a full written report.
For every property in South Australia?
For the ones that are objected to.
Oh, okay, for the ones that are objected to.
So they provide a full report, exactly as if it had been done by an outside firm. And then I, as the adjudicating valuer, if you like, will go through the points, and then I have the authority to, once again, reduce the value, leave it as it is, or increase it.
Yep.
The only stipulation in there is that if it's within 10%, I have to leave it where it is.
Right.
So if it's only a small amount, then it stays where it is.
So the value has to be, what you believe the value to be has to be more than 10% less.
To change it.
To actually get it changed.
Yeah.
Yeah.
To change it.
Yeah. And so, I mean, that can be fairly easy to get that information for residential properties, because there's tools like RP Data, and we can help our clients with that. And there's more regular sales, of people on the same street and things like that. But it's a bit more tricky when it comes to commercial property valuations, would you say? Because
it is.
It's the valuation process is a bit different.
That's probably the majority we do. We do get the odd residential one, and where the residential ones can be significantly different if they're partly renovated, for example, or the front doesn't depict what the rest of the house is like. Those sorts of things. I should point out that there's one other value that people aren't aware of, perhaps, is notional value. So
what's that?
Now you've got your site value and capital value. Notional value is a value that you put onto the property if, for example, there's a higher and better use. So if you've got an original old house on a block that's a massive block that can be subdivided, but mum and dad are still living in the house, they'll value it as a single house, not as its redevelopment potential. So they'll put a notional value on it.
That's a situation where the bank valuation that we can order for the client would potentially be a lot lower than the Valuer General's notional valuation.
No, other way around. So if mum and dad are sitting on a property that's a market garden and it's 3 or 4, 5, 10 blocks, then if you put it on the market, you might get $2 million for it.
Yeah.
But they're just sitting in the old original 3-bedroom home and say, well, look, really, it's just a house to us. It's all we've ever had. It's they might put a notional value on that of $300,000 because that's what all the council rates they should be paying.
So in that situation, would you be paying the council rates on that notional value?
Correct.
Rather than the capital value?
100%.
And that's what will show on your council rates notice.
Yep.
And does that also apply for your SA water and your land tax and
Yep.
emergency service?
Yeah.
All of that is the same?
That's right.
Yeah.
So in those circumstances, you certainly need to look at that. And it's generally where there'd be a principal place of residence on a property that has a higher and better use.
Okay.
So on that objection process, so I then, as a assessing valuer, I can go back and say the property is worth, and at that point, my valuation or my assessment can also be challenged by either party by SACAT. So you can then, if you're not happy with the outcome of that, you can then go to SACAT, and they can say, well, no, we agree or disagree. Once again, the government can also do that. Now, traditionally, they haven't done it very often, but that I have seen a little bit of a rise in that as to different methodologies.
So you can get through the whole disputing process for a minimum cost of, what was the SACAT fee for an individual?
$279 for the initial, or $112 if it's a house, and then SACAT's $210. So $400-500.
$400 to $500 would take you through the whole process.
Yep.
And
if
worst case scenario is that they could actually increase your valuation, which you said is very rare.
Yeah.
So hopefully that wouldn't happen. But then I guess the next worst thing would be that they would just leave it as it is. But there is a potential that you could get your revaluation.
If it's reduced, you get your fees back.
Yeah. Oh, you get your fees back as well, the dispute fees.
Yeah.
So okay. And what, I mean, I don't know if you know this, but what percentage of, applicable disputes would probably be successful? Do you think it's quite low, or is it reasonable?
Look, I think it's probably quite high because the Valuer General hasn't been doing the revaluations, and so if there's specific circumstances that an owner of the property knows about and that is in the marketplace, if you own property, you generally got a fairly good idea what it's worth. And so, look, that can be, easily challenged. I sold a piece of land recently, and it should have been a block that was sort of $250 to $295. The Valuer General put $235 on it. I sold it. The best we could get was $220, and so now the person's paid $220, but they've got council rates at $235. Now all they need to do is object to that. That'll get put straight down because it was a market transaction.
Yeah, so they bought it. So that's a really good point. Like if you are buying a property and you're paying less for that purchase than what the capital value is on the rates notice, then that's an easy objection that you would get approved immediately.
Pretty much.
And that probably wouldn't even cost anything to get that approved because you wouldn't have to take that to SACAT.
No.
So that's a free process that you could go through. So that's a no-brainer, isn't it?
Yeah. Yeah, you just object to it because if you've done it on an open market, obviously if you bought it from a related party, that's not going to count.
Yeah, but if it's a third-party transaction and okay, now that sounds really good. Let's just mention the revaluation process, how that's going to impact the land tax changes that are proposed. But before we get into that, just a shout out to Kristen, Natalie, Louise, Sam and Tom. Thanks for joining us, guys. Like I said before, please feel free to put your comments or questions below. We'd love to answer them, and we'd love to hear how you feel this is going and whether you feel like this is useful information for you. So let's get back to the revaluation process and how that might impact land tax, because obviously there are proposed changes with land tax aggregation that we have got a couple of Facebook Live videos already on, so I won't go too much into that. But obviously it's a double whammy, isn't it?
It is. So if we assume that the majority of properties haven't been revalued for a number of years, then you can expect that the council, the Valuer General's figures will increase. They'll be increased closer to market value because they've been conservative.
So everyone can expect their land tax, if everyone that's paying land tax can already expect their land tax to grow just because of the revaluation.
Correct, unless council changes the percentage that they rate at.
But land tax will
be based on the site value, and so if it gets revalued and the increase, yes, you'll be paying a greater amount of land tax.
I mean, I've had a client come to me recently who has never paid land tax before and has just had the revaluation happen, and because of the revaluation, he's gone from zero to now $4,000 a year in land tax. Mm-hmm. Just because of the revaluation, and that doesn't include all of the extra changes that the government's proposing with aggregation.
Yeah.
So it's a big issue.
Huge.
And it's going to cost a lot of people a lot of money.
Yeah. And there's a flow-on effect for the rents. It ignores vacancies and the risk that the developers and owner investors have. So it is a massive issue to be concerned about. The revaluation, as I said, is going to increase. The bit that is possibly a story for another podcast or Facebook is that even though the Valuer General revalues all the properties, council rates don't necessarily need to increase. They may change slightly between neighbours just to reassess, but ultimately if council's budget is $40 million, that's all they need. So if the values come in up here, they just need to put a smaller percentage on. And if they put a smaller percentage on, they still equal their $40 million.
Do all councils do that though? Or do some get a bit greedy?
Well, that's what seems to have happened. So if they ignore that...
So they really have the choice of how much they charge, is that the reality?
Yeah. So that'll be a thing of lobbying the councils to say, well, you're just making hay and taking fees because the values have gone up. So.
I mean, I guess that is one of the costs, the council rates. But things like water rates, emergency service levy and land tax, given that the valuations or the Valuer General's valuations are expected to increase, it'd be nice to think that the government will come back and say, oh, we'll charge you less, a lower percentage because they're now valued higher, but I don't believe that's what's going to happen.
I don't think so either.
So basically the end result is the state government's going to get a lot more revenue from South Australians. Is that basically what we're looking at here?
That's my assessment. So if I think it's a success tax or a wealth tax that just clawing away. You work hard, you do your best, and try to invest and be self-sufficient, and you end up paying more taxes for it.
But things like, it's that's fair enough for land tax in terms of the investment properties, but there's a lot of people who are living in a house that they've lived in for 30 or 40 years in their home, and the value of their home has grown significantly over the time they've lived there, and the area might have sort of been an up-and-coming area and has really sort of evolved, and they can't now afford their council rates, their water rates and their emergency service levy, and yet those expenses are going to continue to increase. It's pretty challenging for those people, I think.
Quite common on the beachfront, for example, older people that have been on their beachfront. Look, it is.
Beachfront properties used to be a lot lower in value, and now they've, in recent times have really skyrocketed.
Sure. I mean, if you've got an existing rundown house on the Esplanade, you can see everyone looks at it and goes, well, I'll buy that. But the people that are in it have paid $300,000-$400,000, and that's what they've done their figures on. Yeah. And yet, they may be sitting in something that's worth $2 million. Well, if they start paying council rates on $2 million, well, it's like, well, hang on a minute. It's going to cost them. They've either got to sell their love, or try to find ways around it.
Yeah. Well, look, I think we've covered quite a bit in today's session, and I think we're running out of time. So what we're going to do is we'll provide links down the bottom to where you can access the forms if you do want to lodge a dispute. We'll also tag in Carter Property into this post so that you can contact Chris directly if you would like to do that. But of course, we're here to help as well. So please contact us anytime if you want to discuss this further or have any questions that come out of this interview. And also a reminder that our last investment property seminar for the year is on the 17th of October. We've got a few spots left for that. So that is property investment fundamentals, how to build wealth and retire early with smart property investment. It's just education, not selling any properties. So definitely if you want to learn about property investment, come along to that. And we hope that you've had we hope that you've gained a lot of information and education from this interview today. I certainly really appreciate the information that Chris has given us. I think you've shared with us a wealth of knowledge today. So thank you for joining us, Chris.
Thank you for being here.
And we'll tune in with you again soon. So thanks for tuning in. Bye.
Bye.